Well, you know what love is all about. When them kids giving you a headache, you instead of jumping on them and choking like you want to do, or sometimes we might do, but then you turn around and say, "But I gotta call on God. God, I can't lose them right now. I can't let them go right now. Lord, I need you to do something that I cannot do. I need you to put a change in them. I need you to mature. I need you to hold them. I need you to put a hedge of protection around." That's when it get good. That's when it gets good. I say that because I got 3 boys, and we've been fighting, but I've learned how to hold on to God. Learn how to trust God. And if I died and went to heaven this day, I can say I seen God work, because I've seen all of them come back to me now and say, "Daddy, I love you. Yes, sir. Daddy, I know what you was teaching me was right. I know, Daddy, that you love us. I still may not have it all together, but I'm working on it, Daddy, and I
I'm
thank
doing
you.
very well. How are you today?
I know
Doing
what God
good,
can
doing
do.
good.
I know
Happy
how he
New
Good.
Year.
operates.
Good. Did you have
I've
a good New
tried
Year's?
him for
I
myself.
did. How about you?
Oh,
It was
taste and
good.
see that the
I was
Lord.
asleep by 10:30, so that was good.
God bless you.
Yeah, this year I didn't fall asleep, but the
You
last
have been
4
listening
years
to the
I've
Third
always
Avenue
fallen
Missionary
asleep.
Baptist Church.
You
Your
know,
host, Pastor
I'm just
Galen
not one
Wright.
to go out and
You may
No,
go out
also
and
follow us
celebrate.
on our website,
no, not singing.
tambc.org,
That's how I
or
like
on
it.
our Facebook page.
I celebrate every day when I
For
put my feet on the
correspondence or a
ground.
copy of today's broadcast,
You
you may
know,
write us at
Yeah,
2408
so it's
Elsie Pay
all a
Hagen,
blessing.
Dallas,
Every
yeah,
day's a
Texas
blessing.
absolutely.
75215,
Yeah.
or
So you have
call us
big
at
plans for this year?
Yes, I have
214-428-3695
some
or
goals to get to, and I shall arrive.
214-425.
Great Gospel Radio,
Very good.
KGGR,
Very
K295DA
good.
Dallas. We're your community station. 1040 AM,
I was working on a
106.9
report
FM,
earlier, so
KGGR.
I can't hear you.
KGGR invites you to tune in at 1 p.m. on Fridays for our weekly interview with Rob Stern of Mortgage Solutions Financial. Rob has a wealth of information on the American dream of home ownership, credit repair, and refinancing. Be prepared to call in with questions at 972-988-1040. That's 972-988-1040. Rob Stern, Fridays at 1 p.m. on 1040 AM KGGR.
well, good afternoon to you. You are tuned to your community leader, 1040 AM and 106.9 FM, KGGR. I'm Tanya Hall, and we welcome you to Mortgage Solutions Financial, hosted every Friday from 1 o'clock until 1:30 by the expert of all things financial, home ownership, lending, everything you can think of in the home lending business. That's Rob Stern. He's here to help you. And I want to give up front this telephone number before I bring Rob Stern in. Call in, ask the questions that you probably won't get a chance to ask to any other expert of his nature. The number is 972-988-1040. Again, that's 972-988-1040. And now, Rob Stern, everyone. Hey, Rob.
Hello, Tanya. How are you doing today?
I'm very good. Happy New Year.
Well, Happy New Year to you too. 2023 is going to be the year that we put more listeners in homes than ever before. I can just feel it.
Yeah, I love that. That makes me excited. Being a new homeowner myself, going into 2 years, the feeling I have, I want everybody to have that same feeling. So yes, let's declare and decree that in the land for everyone in home ownership land.
Yes, ma'am. And I think that's a good goal. You know, we're seeing prices begin to relax in a lot of areas. There was a point in time in this market where values were overheated to the point where you couldn't even find a home really for under $300,000, and now I'm starting to see contracts come in for in the 200s, well in the 200s. So there's a lot of opportunity right there. People are becoming more realistic about the values that they can get for their home. I think that perhaps realtors are becoming a little bit more realistic with how they counsel their sellers. I am not seeing people pay $50,000 or $100,000 over asking price any longer.
Yeah.
But
It's now a buyer's market.
Yeah, it's a buyer's market. I mean, we saw that for a brief period of time, I guess last year and perhaps even into 21 for a portion. Yeah, the market has changed. Now it's still a very good market. There's a lot of availability. That I would actually say it's a balanced market right now.
Okay.
It's not really
I like that.
rated on one end or the other. But it's a very strong market. I'm seeing a lot of purchase business right now. A lot of people are choosing to refinance right now, take equity out of their house to, to pay the debt from those Christmas presents and the Christmas vacations that they had to take.
A year.
So it's a very active time. The main thing is don't perish or don't lose out on the opportunity because you failed to make that telephone call. This is the right time. This is the right time to get started.
Absolutely. Rob, I want to start out, introduce yourself to others that may not know you. Those of us that do know your expertise, it extends far, wide, and long. And so we want you to introduce yourself to someone that may be just joining our show for the first time.
Well, thank you. Thank you for that, Tanya. Sure. My name is Rob Stern. I am a senior mortgage banker with the Lenders Residential Mortgage Team at Mortgage Solutions. I've got 32 years of experience in the industry of mortgages and banking. We are a very specific niche lender. What that basically means is we are the lender. We're not brokers. We don't third party out any of our products. We literally underwrite, we process, we do all the pricing, we handle every aspect of the mortgage loan, which gives us a tremendous amount of control. I am a direct lender to the Veterans Administration as well as to FHA. I don't put any overlays on my loans, which gives me a lot more capacity when it comes to closing a loan. As an example, no minimum credit score for a veteran to purchase a home. No minimum credit score whatsoever, because the VA allows me that courtesy. I can pass that courtesy on to the veteran. FHA starts at a 500 credit score, again, because that's what FHA allows me to do. So we've got a much larger berth as it may be. I've helped a lot of people get into homes who thought they could not qualify or become homeowners. 20 plus years with KGVN and Robert Ashley. Now you and I are together on KGGR, and it's just a blessing to be here. I appreciate the opportunity. I love the people that I get to work with. I love the opportunities I have to interact in the community. And my best telephone number and the way to contact me is going to be 972-739-2350. That is 972-739-2350. You can also find me by email. Just go to Lenders Texas. That is LendersTexas.com. And I thought I saw that we have a caller holding.
Absolutely. Let's go to the phone lines. Caller, you're on the air with Rob Stern. Tell us your name and where you're calling from.
This is Cecilia and Rowlett.
Yes, ma'am. How are you today? And Happy New Year.
Happy New Year to you all. I was just, it's not me, it's my son and daughter-in-law that's been looking for a house, and I've been advising them to try to get a fourplex because of the stuff going on. It's nothing certain anymore, jobs or nothing, but they have 800 credit scores and got, whatever they need. But I'm saying don't get no $400,000 house, and then if one of y'all don't have a job and then you're not able, I said get a fourplex where it'll pay for a duplex or fourplex so it'll pay for. Am I advising them properly?
Probably. In all honesty, I think that it's a matter of what they can afford based on their capacity. The reason I say that is because you can find yourself in the same situation, whether it's with a duplex or a fourplex. You can have people that don't pay their rent, therefore you're responsible for it. And a fourplex is clearly going to cost you more money than a single family home. A duplex are in the same situation. So I think it's all very relative. Clearly, what you're telling them is is with the best of intentions, and I understand that. And most importantly, I appreciate the fact that you're a mother who cares enough to tell her children what to do. I think that's one thing that we miss a lot in our society. Parents don't take enough responsibility for their children's decisions. So I appreciate that. But what I would suggest is that you counsel them before they do anything to have a mortgage loan approved for whatever they choose to do, and then they can go out and make an informed and a intelligent decision with all the facts that are available to them. The price of housing has gone down, and with that being said, there are still down payment assistance programs available for them to purchase a home with that will minimize their out-of-pocket expense, but they have to start somewhere, and they really shouldn't be out looking for anything until they know that their loan can actually be approved. And I want to go on record as saying just because they have an 800 credit score has absolutely nothing to do with their loan being approved. There's more to a mortgage loan than just the credit score. There's also something called capacity, meaning how much debt they carry versus how much money they earn. So quite literally, an 800 credit score doesn't do a thing for you if you have a debt load that doesn't allow you to become a homeowner. They really need to start by speaking to somebody that they can trust, somebody that you have confidence in, and I would love the opportunity to try and help them through the process. So I'm going to give you my telephone number again.
Okay, I'm driving. Can you give it to us before you end the call? Because I'm gonna stay on.
Well, yes, ma'am. We'll give it throughout the broadcast, and you can always call KGGR and get that number as well. I'm pretty confident they've got it memorized by now.
Okay, go ahead and give it to me. I'm at the light.
Yes, ma'am. That number is 972-739-2350. 972-739-2350.
Okay, I got it. What was your name again? I'm sorry.
My name again is Rob R.O.B. Stern, S-T-E-R-N.
Thank you so much.
No worries, and God bless you. Thank you again for being a good mom.
God bless you.
Yes, ma'am. Happy New Year.
Thank you,
Bye.
caller, for calling in. Wow. I'm glad she took that moment to get in there and get some expert advice, because although she, was thinking on the right path, you hit something really that nobody ever thinks about. They always think, oh, I got a stated credit score, it's 800, it's this and that. But what is your debt to ratio when you're
Yes, ma'am. And that's really more of an issue than anything else. It's clearly there's something to be proud of having a good credit score, and that does help. There's no doubt about it. Yeah. But debt to income ratio, and let's take a moment and define what a debt to income ratio is. I don't think we've done that in a while. Yeah. Your debt to income ratio means how much you earn documentable, meaning what your gross income is with your employer, versus how much money you owe documentable from your credit report. So as an example, if you make $5,000 a month from your employer, but when I pull your credit report, it shows that you have $3,000 a month in debt that you have to pay, you're going to have a hard time getting a mortgage loan for anything, because your debt to income ratio is out of whack. Now there's a lot of what ifs that are involved there, and there's a lot of ways to work through those things, but the smart move is to let somebody who is knowledgeable, somebody who has that skill set, who is experienced it with creating a debt to income ratio, look at everything, pull the full file together. It is a full file. In other words, just the credit means nothing, just the income means nothing. Yes. You have to put it all together to create that debt to income ratio, and then come up with what's called a pre-approval, meaning that individual is approved to spend a specific amount of money, and then you go shopping.
Yeah. And you know what? I like the way you say that. And then you go shopping, and that's the fun part. But let me just say this also, I heard you say that pre-approval. Now there's, and this is where people get caught up a little bit. The pre-approval and there's another, what's the other word?
Pre-qualification.
Explain between the two.
Yes, ma'am. Yes, ma'am. So when you pre-qualify somebody, it means that you typically are taking a telephone call from an individual, and they say, I make $9,000 a month. And you pull their credit and you look at the file based on that pretense. Well, you don't have anything firm to work from. You are issuing what's called a pre-qualification. It has not been through an underwriter. Nobody has provided you with documentation to support the transaction.
Mm-hmm.
Once you get the documentation to support that $9,000 a month income, then everything can be pushed to an underwriter who will actually review everything: bank statements, credit report, paycheck stubs, W-2s, put the whole file together and issue an actual approval that says you are ready to go buy a home and you are pre-approved to spend this much money. That is the way a mortgage loan should in fact be handled. And unfortunately, one of the things that we see way too often, Tanya, with these home builders, and home builders own most of these mortgage companies that they refer out to.
Wow.
What we see most often with these home builders is they don't even go through the pre-approval process. They're so busy, they just will pre-qualify people. Tell me how much you make, I'll pull your credit, great, you're approved, and they move on to the next person. That's one of the reasons why 6 months later or 8 months later, when that house is finished, they have to say, I'm sorry, you don't qualify. I can't approve you, because they never really had the loan approved in the first place. And yes, it's an absolute fact that most of these home builders, the big home builders, actually own the mortgage companies that they push their people off to. So in other words, they're taking profitability from all sides of the transaction. Many of them own the insurance companies that they push people off to as well. And while I understand the reason that these home builders do that, the fact is it's incredibly unfair to the consumer. The home builder has way too much control over the transaction. And that's a big reason why we see a lot of home builder contracts. That's a big reason why a lot of individuals decide that the home builder is just not working in their best interests, because many times they're not.
Mm-hmm. That's unfortunate, and a lot of people nowadays, folks are getting into I want a brand new spanking new home. I want to go through a builder. So you're saying that's not always advantageous for a lot of us. You have to be careful at the builder you choose. Now, can they do that same thing through you if they say, Rob, I don't want a pre-owned home, I want to build it from the ground up?
Sure.
So what would you do from that step forward?
I would pre-approve them just like I would any other borrower. Mm-hmm. So and a lot of the work that I do is actually picking up behind the home builders' mortgage companies. In other words, loans where they've told somebody to go ahead and build a house, and then they find out that the home builder cannot even do the mortgage, so they call me on the phone to bail them out, and which I'm fine with. But the point to all of this is, when you give somebody that much control over your life, not only are you building a home and you're investing in the home emotionally, but they have all the control over your mortgage and when the loan closes and how the loan is built, and that's just too much control from my perspective. I think that there's a lot of legislation and a lot of litigation right now about that very fact. The fact that the builders are doing that and they own these mortgage companies. The fact that they are being a fully integrated unit where they have control over everything. So there's nothing wrong with a new home, but I would certainly say that before you use the builder's mortgage company, you certainly should give some thought to the amount of control that you as the consumer want to have over the transaction, and the amount of accountability that you want to have in the transaction. Because when the builder controls everything, the consumer loses all the accountability. Mm. There's nothing the consumer can do when the builder has all the control.
Wow, that's scary.
But it's true. But it's really true. And one of the things that we saw happen quite a bit last year, specifically because of the crazy market we were in, is that builders kept pushing home due dates out, saying, well, we're not going to be ready for another 2 months or another 3 months. And when they have all the control, they can do that, and there's nothing you can say.
Yeah. And when they're pushing out that time, a lot of times where you're expecting to go into a house, people are in apartments that are under leases. And so they've already given their notice, contingent upon what the builder may have told them. Okay, you're going to get in there in July. And so they give their notice, and then come 2 weeks before July. Oh, sorry, you're not going to go in. That bad them up and having to put more money into leasing a property. So that's why they should call you. That's really why they should start with a
No,
company
you're,
like, yeah, they should start with a
yes,
company
ma'am.
such as yours, Mortgage Solutions Financial, so that you can get through this home buying situation without any war wounds.
Yes, ma'am. That's right. Clarity is everything. Having a good, clear understanding of what's going on is really what makes the mortgage transaction work. And it shouldn't be difficult, and it shouldn't be all consuming, as long as you have a good level of communication with all parties concerned, whether it's the title company, the home seller, your realtor, and certainly your mortgage company. Everybody should be working together as a team to make the transaction as seamless and painless as possible.
I want to go back to the caller that mentioned about how she had 4 individuals and telling them that they shouldn't get a house that's $400,000 or $500,000. Maybe they should do a fourplex or something. I want to talk a little bit about the importance of knowing what it takes to get into a home. You said the debt to ratio is one of the most important things that will qualify you or disqualify you to get into a home. And so let's talk to the folks that may be trying to get a home saying, wow, debt to ratio. I didn't know that my debt has to be less than what I, make.
Sure.
And what this house is going to cost. So in other words, the lender is not wanting you to get into a financial bind. So what is usually the percentage of the debt to ratio versus your pay should you not exceed?
Sure. So typically we want to see a housing payment that is no more than 43% of your gross income. So as an example, if you earn $5,000 a month, we don't want to see the housing payment be more than $2,150.
Mm-hmm.
Okay, or $2,250, whatever, because that is what is deemed to be an acceptable housing payment. No more than that. We don't want to see your combined debts exceed more than 57%. 57% would be a much greater number, but that is taking your housing expense plus all of the debts that we pull off of your credit report. Now, interestingly enough, some debts on the credit report don't count. And this is what can really mess somebody up when they try and calculate it on their own. Some debts on the credit report don't count. Some debts on the credit report have to be counted at a certain percentage. So if it's a student loan debt, I have to count that at 0.5%, meaning if you owe $20,000 on your student loan, I'm going to count that at $100 a month.
Okay.
So you really need to go to a lender to help structure the transaction. Give us an opportunity to build a mortgage loan so that you go into it with a clear understanding of what you can work with. At that point, we get to a realtor. The realtor does their work, whether it's going to a new home builder or looking at pre-existing homes, and you know exactly where you are and exactly what your payments should in fact be, again, depending on where you choose to live, because property taxes can differ, homeowners insurance can differ. But really the smart move is to start with a lender always. That way you're not in a compromising situation. I've heard and experienced countless stories where people have come to me with a contract already in hand for a home they can't afford. But they've already put down their earnest money, and they went out to a builder. They got all excited because the builder allowed them to contract the house. They gave the builder their $2,000, or the one that I'm working with right now gave a $5,000 deposit.
Man.
And the end result is it's not a house they can even buy, and they lost all that money because of it.
Oh, what a nightmare, Rob.
It's been a nightmare for them, and it's because they did it backwards. They had the right thought. They were excited. They were happy. And like I said, what most people don't understand is that the individuals who represent these home builders are salespeople. They're not there to help. They're not there to help the consumer.
Yeah.
They're there for one reason, and that's to sell and to make a profit.
And it's at the expense of people's livelihood. People have saved their money. They've gotten their, debt to ratio at the right,
Yeah, right.
ratio to get a house, and then they go to a developer like that, that can put a sour taste in your mouth for home ownership. And that's why we have you here every Friday, Rob Stern and Mortgage Solutions Financial, so that people can understand the ins and outs of the home ownership business, how to walk through it. You'll gingerly walk them through it. And if they're not ready for a house according to their debt to ratio or their income, you work with them through a process to get them there. Tell us a little bit about that.
Ma'am. Yes, ma'am. Well, the first thing we do with everybody is truly go through a good interview, meaning what exactly are they hoping to accomplish in the transaction? That's critically important.
Mm-hmm.
Once we know what it is that they're trying to accomplish when their lease expires, we can kind of build an action plan to move forward. Contained in that action plan would be how much they earn, what their credit looks like, what their debt to income ratio is, and we'll put together a plan as far as moving forward. Very oftentimes, I work with people for a 6-month or a 9-month period as they move through the action plan to get to a point where the lease is getting ready to expire and we can actually go out and buy a home with confidence. It's like anything in life. It takes planning. You don't grow up to be a professional football player if you don't put in the time.
That's right, Rob. Absolutely.
You got to put in a little bit of time if you want to become a homeowner. And if you just put in the time, it's like anything else in life, the reward will come. But
Absolutely.
you got to put in the effort.
We got about 2 minutes. I want you to give everybody your information and give them a 30-second synopsis as to how important it is to contact a company like you when they're first-time home buyers.
Thank you. I really appreciate that, Tanya. So my name is Rob Stern. I actually represent Mortgage Solutions with the Lenders Residential Mortgage Team. I've got 32 years of experience doing this, and quite literally, we are direct lenders and bankers. What that means is that we are in a position to work without any risk-based overlays. So when it comes to veterans, we close our veterans loans with no minimum credit score, only the minimum acceptable credit criteria that VA issues. More importantly, as a veteran, you are eligible to go up to a 65% debt ratio using Lenders Residential Mortgage Team, which is 30% higher than any other lender out there. So veterans really have a great opportunity to purchase a home when we have an opportunity to work together. In addition to that, FHA, we started a 500 credit score, Tanya. FHA has allowed us that courtesy. At a 500 credit score, we can put pretty much anybody into a home depending on what their credit looks like. And again, everything is really driven by that initial interview and creating an action plan to move forward.
Give them your phone number, Rob, and how they can reach you.
Yes, ma'am. Thank you. My telephone number is 972-739-2350. That is 972-739-2350. My internet address is going to be Lenders Texas. That is LendersTexas.com. You can also find me on Facebook as the Lenders Residential Mortgage Team. But the main thing is just find me. Give us a shot.
Absolutely. Rob, it's always a pleasure. We're going to do this next week, 1 o'clock until 1:30, right?
Absolutely. It's a date. And I really look forward to seeing you again. Take care, Tanya.
Absolutely.
And Happy New Year.
Happy New Year, everyone. This is 1040 AM, KGGR.
Bye-bye. Take care.
KGGR invites you to tune in at 1 p.m. on Fridays for our weekly interview with Rob Stern of Mortgage Solutions Financial.